Mike and Tom are registered with Steward Partners Global Advisors.
Common Sense Finance with Mike Wiginton and Tom Farrell of HL Wiginton Capital Management, an independent investment and financial planning firm in downtown Jasper. Mike is a chartered financial analyst charter holder, and Tom is a certified financial planner professional. They are here to discuss and give their thoughts on current financial and economic matters. Now, with Common Sense Finance, here are Mike and Tom.
Welcome back to another edition of Common Sense Finance. I'm Tom Farrell. This is Mike Wiginton. So this is, especially the last 3 or 4 years, the housing market has been in the media spotlight a lot about, the medium home price has gone up and it's just continued to go up over the last 4 or 5 years, which, you expect it to go up a little bit each year, but I mean, some of the increases have been really outsized. So you've dug through some data and you've looked at some things. So is there a correction coming in the housing market?
Yeah, so that's how we pose this thing as a question about it as possible, and I think that is a legitimate question that we should ask. For the research that we subscribe to shows that for most Americans that own their homes their only source of savings, okay? That they don't have any substantial savings outside of that, okay? And so, for our, and you and I talked about this. If you're not planning on selling your home, you're living in it. Maybe you don't care about this, but then we talk about that bias, that wealth effect that people have, that they see quotes about their house or whatever, it makes them feel wealthy. And then they go out and are willing, and this is purely a psychological phenomenon, they'll go out and spend more money because they feel more wealthy.
Right.
Even though that's not cash in their pocket. And I would say then the inverse of that would be true, that if they felt like they were less wealthy all of a sudden, and we know that perhaps the reverse of that psychological tendency, they might spend less money.
Certainly.
All right. And so, so I think it's a great question, and I just kind of want to delve into that a little bit. We all know what's been going on in, well, I don't know if we all do, but we know what's been going on in commercial real estate, and we talked about that in commercial real estate for a long time, because commercial real estate is bought, for the most part, based on mathematical equations, okay? Now, if you're sitting at home listening to this, and I know a couple of you, I'm thinking of you, and I'm going to look at you right now because you probably know who I'm thinking of. That because you own some commercial real estate, and that's the only thing that you own, and so you don't think about it like this, well, you know what? You don't even really count, because, it's like statistically you're insignificant, and you're probably thinking about it wrong, okay? But when you get at the institutional level, where statistically all of the commercial real estate's bought, from a dollars and cents standpoint, right, this is the way it's bought. It's bought off cap rates. Meaning what we're getting into is what kind of return are they going to make, all right? Which is all based on what they pay for the property. The lower the cap rate is, the reason that rate to you is lower is because you paid more for the property. And so, just like, it seems like it's a couple of minutes ago when interest rates were zero. They actually pushed interest rates below zero. They were doing cap rates on commercial properties right around 5%, maybe a little less than 5% in some cases, but right around the 5% threshold. I'm thinking, and we talked about it, who would buy commercial real estate at a 5% cap rate? So lo and behold, guess what? Apparently all these finance gurus didn't know that things like inflation and interest rates change over time. And now you're in a different, in my opinion, you're in a different regime. You're in a different interest rate and inflationary environment that I say, my opinion, and I am an authority on it, is going to persist. I could be wrong, but it doesn't make me less of an authority, all right? And I spent the time to get there too, so that's not any sort of boastful thing. I'm just saying that for compliance, all right? So now, there's the article that Oliver Stone's going to put up. And I see these all the time. This is just one I grabbed where, and this and these are so-called sophisticated institutions selling the building that they bought a few years ago for $332 million. They're selling it for $8.5 million, a 97% reduction. All right. So the reason I bring that up is that there are issues that affected commercial real estate that resulted in that.
Right.
I'm saying there's real issues in the residential housing market, and you can't argue that not only are they going to, they are right now. I'm seeing it firsthand, perhaps you are too. They're having negative effects on the residential housing market. And I'll add to that because our homes are this emotional asset that's well-founded in all sorts of financial psychology literature, and it doesn't matter. The market doesn't care about your psychology or your feelings. Residential housing is an asset class that can be affected by all sorts of trends that happen over a market cycle. Okay, so let's just talk about a few of them. All right. Hopefully, most people that are listening to this know there's certain markets that are having a real hard time. Florida and California being two, right? That there's you read every day, you can read multiple articles that they're saying that what's going on in Florida's insurance market is a crisis. So I'm experiencing that firsthand, where our HOA fees have doubled in the last, since 21, all right? They've doubled, and it's pretty much all of that increase has been driven by insurance, okay? And people want to talk about, well, you've had these storms and blah, blah, blah. Okay, there's always been hurricanes, since before you or I were born.
Right.
Okay, and as they've built more and more buildings in a place that gets hurricanes frequently.
Closer and closer to the water.
And every one they build, the one they build today is more expensive with more newer, nicer, more expensive amenities than the one they built yesterday, and so on and so forth. There obviously is more economic disaster. The insurance companies can see this and price this into their rates for the most part. But here are issues that are going on in Florida, all right, that people, well, it's being talked about, but when you get to, down to the personal level, like these HOAs, they want to say, oh, these insurance companies are killing us. No, Florida ranks #1 in the country for insurance fraud. Okay, get a load of this. You can find this in lots of places. I pulled it off of Florida International University News, okay? But you can find this anywhere. Florida as a state, makes up 9%, nationally, 9% of homeowner policies. They make up 79% of lawsuits over home policies. That number's not even hardly believable. But you get out and look for it. Hurricane Michael came through back in 2018.
Yep.
We were hit by that. We were affected by that. Experienced the same sorts of stuff, man. I'm just telling you that there's lots of other. California, came in and they wanted to enact laws to say, oh, you can't, and there's insurance companies just can't charge whatever rate they want to. The state insurance commissioners get involved. But you can read for yourself, and I'll provide links to articles on I think it was State Farm. I'll put the link up. That was they listed the zip codes where they were pulling their policies out. They're not going to underwrite policies, and look at why they're not. Okay, so insurance rates have gone through the roof in Florida and in California. You say, well, those are local markets, and so. What does that have to do? Is it big enough to move the needle? Okay, well, think about this. Our research that we pay for, and these folks have been doing this a long time, and I followed them for a long time, and they can be wrong, but they're authorities in the field, all right? This is what they do for a living, and it's not cheap. Insurance payments have increased on a national basis. Let's get away from Florida and California. On a national basis, 52% since 2019.
So that's insurance premiums you're talking about. Okay.
Mm-hmm. And they've increased more than 11% in the last 3 years. Property taxes have increased 26% nationally over the last 3 years. And we're not even getting into the inflationary spike that has affected, I know you know about the grocery store, but everything in the building community. You know about don't you know about it? Somebody might be building a house. I don't know who it could be.
I've heard.
But you know, so the point is, again, back to the research that we show, and this is interesting for people, that over 50%, over 56% of homes in the U.S. are owned by people over 60 years old. And of course, a lot of those people live on fixed incomes, all right? They're tracking this and saying, hey man, there's a real financial strain going on in the country right now, especially amongst older Americans. And that's what's driving a lot of this research, okay? So, okay, as of the second quarter of this year, 2024, Americans over the age of 60, see if this surprises you, Americans over the age of 60 grew debt faster than any other age group in the past 2 years.
That is surprising.
Because these are people that historically are in a deleveraging cycle, okay?
They just can't keep up.
And so the deal is that, hey, are these folks going to be able to afford these houses? Because you're talking about an age group that owns most of the houses. They're experiencing financial strain, with insurance and property taxes just being two that kind of get some headline news. We saw firsthand the amount of money that came into the markets, especially anything that's around a legitimate body of water, like our local economy, and it's a very popular, very large lake that's very popular on a national basis. How much in 1031 exchange money came in? Okay, I've been there. I participated in those sorts of deals, and you know when it's an all cash deal, but you're motivated by avoiding taxes. That's what the 1031 exchange is about. And compliance, if you want me to add a disclaimer at the bottom of this thing, another 56-minute disclaimer about what a 1031 exchange is, we'll do that. People can decide for it. But they're trying to escape with this IRS clause, the 1031 exchange, where they can swap parcels under certain, under certain rules. They can escape taxes that they made on the property they sold. That motivation to escape the tax will lead them into paying maybe more than a very high price.
Not to mention you're limited on your purchase and the timing of the purchase too. So a lot of people end up.
Yeah, so you're right. So they're pressured to make the deal because they've got a timeline to operate under.
Yeah.
That's exactly right. So that's just another issue that's fed into this since 2020. Mm-hmm. Okay. And people in general, the kind of people that be watching this podcast, are generally aware of this. So you've got lots of factors that have gone into play. Certain markets may be more extreme than others. That's always the case. Right. You might get a sector in the stock market like technology that their valuations get blown up more than another sector. But if the whole stock market falls, everybody's going to suffer. Some may suffer more than others.
Right.
Just no different in the real estate sector. But it just seems to me that it's a legitimate question to ask, hey man, are we going to be in between a rock and a hard place? Look, if you're like our children that are, in their early formative years out of school, in terms of their career formative is what I mean, that lower house prices would be good for them.
Sure.
They're looking to get into the market. So, for every loser, there's a winner, and vice versa. But if you're out there, especially if you are thinking about, hey, we may be selling our home to upgrade, or what. These are interesting questions.
Yep.
And very interesting in these vacation-oriented communities.
So your thinking is if enough of these older 60-plus people decide to start downsizing, or they just cannot afford to continue to maintain and live in those homes, if enough of those people start selling, then it's going to have a downward effect on home prices.
That's what it could. Hey, listen, there's already, it's very well documented about the number of people that are leaving the state of Florida because they can't afford it anymore. Just like it was well documented about the number of people coming into Florida, and they track those numbers. And so, and they've even started calling a lot of these people that have moved in from the north and moved to the south, and now they're moving halfway back because maybe in a spot where they can afford, but the weather's still not as cold as it was where they came from. They call them halfbacks.
Right.
So this is going on to the point where they're actually coming up with terms for these people.
Right.
So, and how do you, obviously the question that I would ask is, okay, well, how do you accurately gauge and measure the number of people who are doing that? Well, I don't know that there is a way to. So to the degree that you have done it and you are tracking it, the numbers is very, very most likely way more than you think it is.
Yeah.
So, yeah, that's, I mean, I would say that the bulk of our market that's consuming our podcast own a home and would be affected by any such change in the market cycle. And there are going to be changes in the market cycle.
Well, it's definitely something to keep an eye on because residential housing is a huge piece of the overall economy.
Sure
so
is.
we'll have to stay in tune with that. Anything else?
Nope, that'll do it.
Thank you.
See you next time.
Controversy. Controversy. Do I believe God? Or do I believe me? Some people wanna die so they can be free. So life is just a game. We're all just the same. Controversy. Controversy. Controversy.